Hey, what's up, YouTube? It's your boy Zay, bringing you Only Hustling Game. We got a quick episode today. We're going to be talking about how to do a leap call on a stock. And for this stock that we're going to be using, it's going to be ChargePoint, ticker symbol CHPT, just because that is a stock that I myself am looking to do a leap call on. Let's go ahead and get into it. Leap call is basically doing a call option that has an expiration date of 6 months or farther out. And this can be very beneficial for you because, especially with a very young company such as ChargePoint, a company that's just gone public, if you're predicting that this stock has the potential to grow massively, if you do a call option on a stock like this and have it with the farther expiration date, the potential gains you can have from it versus buying like 100 shares of the actual underlying stock is going to be way more than, it's going to be way more doing the call option, so the amount of profits you can make is going to be tremendous. So let's go ahead and dive into this video real quick. I have it pulled up right now on my Robinhood app, ticker symbol CHPT, and I'm going to be telling you guys why I'm looking to do it on this particular stock. But before I do, let's just go ahead and get this call option going. So you're going to go to trade options, and as you can see, the farthest out you can go for ChargePoint right now is January 20th of 2023, which is perfect, right? That's perfect for me because I feel like, from where we are now, we're in September of 2021. That gives us a good year and a half, about a year and a half for us to see the potential of this company to grow tremendously. Now, why I chose ChargePoint is because with the EV sector growing like crazy, Tesla, NIO, all these popular, electric car companies, technology companies out there that are getting into the, electronic vehicle sector, ChargePoint manufactures and installs charging stations, right? So if you didn't know, Joe Biden actually passed a $1 trillion infrastructure bill where it's going to go to the EV sector. And of course, with the biggest car company out there, the biggest electric vehicle charging station company, they're going to get a bigger chunk of that, right? And that's going to allow them to put charging stations all over. So with ChargePoint, it's one of these companies that has consistently beat their earnings, and we can look at that right now. Has an 88% buy for analyst ratings, and we're actually going to look at this on TipRanks as well. But 52-week low of $10.25, 52-week high of $49.48, market cap of $7.3 billion. So it's a well-established company. We look back on the Q4 of 2020. They met their earnings. They fell just slightly short at the beginning of Q1 of this year. Q2, they met their earnings. And you guys know that these companies that are just coming out with these charging stations, they are relatively new. There's a lot of people who still don't really like electric vehicles, but of course, we know that that's the future. So any smart investor would know that getting into the EV sector is a smart move. Let's go ahead and look this up on TipRanks real quick so I can show you guys what the analysts are saying over there. Alright, so right now we see that the analyst activity has a high estimate of $46, a low estimate of $24, and a mid-range of $34.38. 6 buys, 2 holds, 1 sell. Has a smart score of 7, which isn't bad on this scale here. It's a moderate buy, and it's up 4.3% in the last 30 days for investor sentiment. The change in number is people holding ChargePoint in their actual portfolio. It's up 4.3%. So another thing that's great about this company is the CEO, right? The CEO has actually talked about his company, and he's actually undervalued it, which is great in a way because when a CEO comes out hyping up his company, talking about, it's going to beat earnings, trying to raise his share price up for the stock, and it doesn't meet those expectations that somebody hyped it up to be, it's not a good look for the company, right? So when you undervalue it, when even the CEO is talking about, we're not there yet, basically is what he's saying. We're not there yet, but we're going to get there. That's great because, you're being humble, you know that you just started out, so your stock price is not expected to be tremendous. Right now, it's currently trading at $21.83. After hours, the market's closed. It has a pretty good resistance line of about $20. We actually seen it dip down dipped down to about $20.82 on August 20th. This was pretty recently, but it stays pretty consistent at that level. So if it was to dip down again to about $20, that'd be a great buying price. Even right now at $21.83, it's not bad at all, considering where we can see this go in the next 2 or 3 years. So doing that option call where we go far out, like January 20th, 2023, buying a call. The one I'm particularly looking to get into is the $15 call. It has a break-even price of $25.43. We can see that it would cost us about $1,045. But honestly, that's not a bad investment. $1,000, and if it was to go up even to $30, that's already a $450 profit off of one contract alone, just one. So I really would like to get at least 2 or 3 of these contracts. If we were to look at it right now, $21.83. I don't know what that is off the top of my head. I'm predicting about $2,100 it would take for us to get 100 shares. So if it's $21 and we're looking to get, 21 times 100. Who wouldn't know that, right? 21 times 100, that's 2,100. So you can see doing this call option is way cheaper than buying 100 shares outright. So going back to it, that $15 call, it would be crazy, because I know for a fact that this stock is gonna be way more worth $30 in 2023. If we were to buy just 2 contracts, let's take a look at 2 contracts real quick, because that's really what I would like to get, at least 2. Okay, 2 contracts, about $2,000, which is still cheaper than what it would cost to purchase 100 shares right now. So going back to that same $30, it would be $917 in profit. And what's crazy is that the closer we get to these dates, or as time passes, the theta is going to decay, which is something you really don't have to worry about because we're so far out. The price of these calls is going to increase, right? Because as ChargePoint grows, the company grows, the stock price starts to raise up. Trying to get back into that $15 call is going to be more expensive, because everybody knows that it's going to just keep going up. It's one of these companies to really keep an eye on. Like I say, the EV sector is the future. This is a great way to get into it if you're not looking to purchase 100 shares. Even though myself, I would like to get 100 shares of ChargePoint, because at that point in time, you can start doing covered puts, covered calls. You can do a lot of different strategies when you have 100 shares of a company. And ChargePoint, I believe, is going to be the next one I'm going to be looking to get 100 shares of. So, guys, that's how you do a leap call. Like I said, the one I'm looking to get into is ChargePoint. I gave you my reasons why I would like to get into ChargePoint on this leap call, and our future profits that we could potentially make just by it going up about $9 from where it is now. It's a great buy. Do your own due diligence. Look into it. Research it. Look at those earnings. Look at the history of the company. Look at the CEO. Gather all the information before you make an investment in the stock market, because again, it's never guaranteed to go up in value. I'm just very optimistic and bullish on ChargePoint, just because with everything going on in the EV sector, we have great potential to see it grow. So like I said, I'm Zay, bring you only a hustling game. I hope you enjoyed the video. Please like and subscribe, and stay tuned for more dope content. Peace.